For everyone, thank you very much for joining. Very excited to be joined here on our Crypto Curry live chat with Simon and Graham from Archax. So they're probably the hottest story in crypto this week. And at the moment, they're the UK's first company to be FCA regulated. They're a digital securities exchange. So they're working on some really big projects. We've just been speaking about some of the changes that means for digital securities and institutions looking at crypto and what this means for the crypto space going forward. So it's really big and exciting news, and these two guys have been working tirelessly for years to achieve this. So it's a great achievement for them, and they've kindly giving up their time to speak to us despite very busy, hectic schedules. So grateful to Simon and Graham for joining us. Also joined here by Ryan Hanley. So Ryan was MD of Token Market. He's now working at CoinFirm, so very big in the crypto space. He'll be helping to ask all the hard questions. For anybody who's got any comments, and thanks again to Simon and Graham for joining us, and we look forward to hearing more about Archax and what's next for you guys.
Erica.
Wonderful. So yeah, Simon, congratulations first and foremost. I mean, you guys obviously have been in this process of getting this regulation, I think over a 2-year period, which is quite groundbreaking for the industry in terms of being able to tokenize securities. Maybe a good start-off point is getting an understanding of what this actually means, what you guys are actually doing, what this regulation actually kind of means, why this is so groundbreaking within the UK. And why it's necessary.
Sure. Yeah. So hi, Ryan. Hi, Erica. Thanks for having us. I guess we've got our permissions to be an MTF, a custodian, and a broker, and that's focused on securities. And about the start of 2018, when we started Archax, we decided that securities were a thing. Obviously, there were a lot of offerings getting into trouble for marketing and selling securities, but you could see that the technology would lend itself to securities over time. So we felt like there was a bit of a gap in the market, certainly in the UK, for someone to have a regulated venue to trade these securities. And it became clear to us that institutions were looking into the space as well, and being able to operate from a jurisdiction with the FCA permissions would make a difference and give any institution some level of comfort if they were to trade with us. So fundamentally, what we can do is we can take securities and allow them to be admitted to our venue and then traded on our venue and custody those positions as well. So obviously, anytime anyone's dealing with a security, they need that to happen. You can't custody securities on behalf of clients. You can't trade them in a multilateral way with multiple buyers and sellers unless you have the appropriate permissions. So now we have them. It enables us to hopefully create some liquidity in a secondary market for all of the digital securities out there that have been created.
Brilliant. So maybe it might be worth going into a little bit more on how securities are currently traded in the UK, or some of the issues around that. I mean, let's say, I've earned some private shares within the company. Maybe it might, do very well in 8 years' time, but I've got a leaky roof and that needs to be fixed, or I've just had my 4th child and I need to buy a people carrier, and I'd like to sell some of those. What would the process be at the moment if I had, sort of, as I say, options or shares within a private tech company right now in the UK?
Yeah, I guess investments can take many forms, and the whole area, to be honest, is ripe for disruption. I guess taking a private securities example, especially now there's a lot of crowdfunding platforms out there. There are examples we've all had where we've invested in friends' companies or a crowdfunding platform, and you own what is really a private equity position, which is great, and maybe you'll make some money, but for the most part, you probably have an illiquid instrument that you can't realize the value of, and that can be a challenge. And you'll see a lot of the crowdfunding and peer-to-peer platforms out there developing bulletin boards which address it to some extent, but they create somewhat disjointed secondary markets. So you need some form of liquidity for most of your private investments. And then obviously you've got the kind of more public securities, for want of a better word, that you're unlikely to be able to participate in the IPO from. Maybe maybe you buy it through your retail brokerage through several layers of intermediaries. You don't get direct access. You probably don't get the best execution. And then you're probably paying annual fees or custody fees as well. So really, despite the fact there are more protections out there for a consumer, for most of us, if we invest in private securities, we're entering into quite an illiquid market.
Oh, we've lost you, Graham. You've muted us.
No, hang on.
Am I
back on?
Did you get it there? So, and if you enter the public markets, you're probably paying more fees than most of the professionals out there. So it can be frustrating for most people. And what we're trying to do, and what a lot of people are trying to do in the space for private securities, is enable companies to have better access to capital markets. So that they can raise money from a wider group of participants, and hopefully enable some form of liquidity in those shares as well.
So one of the things that always comes up, and thanks, you covered a lot there, so there's going to be about 4 follow-up questions on that one blow alone. So a lot of companies or people who invest in early stage companies from kind of an institutional level, sometimes they don't like liquidity. So let's take Snapchat, for example. When those guys were still sort of getting all of these teenagers to send, various naked photos of each other to various parties, building this huge, big user base, one of the very effective things they did to build their valuation is they didn't really provide a business model. They sort of went, well, look, we've got all of these 14 to 18-year-olds. You all want these guys. We're going to work it out. And I think at one point they had sort of a $4 billion business model as they're kind of going through these various different private rounds. Is that the norm for most companies, or where do you guys sort of see the gap that you're filling? Is it the guys who are not able to, get private equity funding, VC type funding, or is it a bit of a mix of both?
I think it's a bit of a mix. I think there's a if you're a startup and you're raising a small amount of money, a few $100,000, less than $1 million, you can probably go around your friends or go to crowdfunding platforms, and there's a good chance of success of raising that. Or if you're a large company and you're going out there raising 100 million plus, and everyone knows you've got a true disruptor, then you're not going to struggle. But if you're in that bit in the middle where you've got a pretty cool product, a couple of people are doing it, but you still think it's a good investment, then you're going to struggle. You can raise mini bonds. I'm sure people have seen shops up in London or the like, saying participate in our mini bonds stuck in the window. These are all illiquid markets. There's a real gap there for people to participate in. And in terms of the valuation point that you made is true, and it's not for everyone. People don't have to raise money on a platform and then trade it on our secondary market. And it's also not the case that a central limit order book trading 24/7 is the right market. It might be the bulletin board and auction traded semi-annually. But for the most part, what I see happening, and I'm by no means an expert in the VC space, is there's a bit of a game of people investing and pumping the valuation, and the next people come in, and you saw it quite clearly happen with WeWork. I'm sure there are other examples out there, and I'm, my background is accountancy, and I'm more for a transparent valuation model. I'm more for a company, a company's value truly reflecting the value of the company. And I don't just mean in terms of multiples of revenues. I just think means something more transparent, so that by the time it gets to the end consumer, it isn't already at 10 times its original valuation before it's being dumped on everyone else. More that there's more of a transparent model throughout the life of that asset.
No, it makes absolute sense, and one of the things that you obviously see from a number of the kind of the crowdfunding companies which are coming through is the lack of reporting obligations. So obviously, as a public company, you're looking at quarterlies, you're looking at various in-depth areas of kind of data which you're able to make these evaluations on, and we've kind of seen, I think you guys are partnered with one of them, a quite interesting approach from Clearbank, who are starting to ingest actual SaaS platform sales revenue and then being able to lend money off the back of that. Are there any particular reporting obligations that you guys are going to actually make sure that people who are listing come up to a certain standard to ensure that you are able to get that fair price discovery and kind of give maybe a certain level of transparency, but obviously not the obligations that you would have with, say a public market or listing on, say, the London Stock Exchange?
Yeah, and it's a really key point, Ryan. And transparency is going to be critical for this market to work well. And there are some assets, like equities, where you get their financial statements, maybe sales results, whatever it might be, where it's a well-trodden path. But when you're tokenizing art, when you're tokenizing a fund, if you've got some sort of real estate portfolio, you need to start thinking through, okay, what does an investor need to see to make sure this is a transparent, fair investment? So our background obviously is in fund management, so you'd be looking at estimated NAVs, any sizable positions, obviously maintaining an insiders list at all time. I think there's some areas that are pretty obvious for everyone, but our whole platform has been designed not just from a trading point of view, but so that we maintain information on all of the underlying securities. And to be honest with you, there's nothing particularly groundbreaking in what we're doing there. If you were to go onto LSE, you'd quite clearly be able to drill down into some level of all of the underlyings. And even if you go into some brokers like Hargreaves Lansdown, you can do the same. But because the assets are slightly novel that we're looking at, we're thinking of other ways to look at them. We're trying to include some interesting things like ESG ratings as well, and information on the underlying offering. So, one of the things the FCA were really keen at looking at was these things are trading on your venue, but what information are you providing? How are you going to assess them before they come on the platform? And a lot of what we're covering is, okay, how do we make sure investors are able to obtain as much information as possible to know the price they should be transacting at?
Makes sense. So in terms of the ideal type of customers that you're looking for from a kind of a listing perspective, where would you say you sit? Because obviously we've kind of got the AIM listings market, which has had some success, but largely has been quite flat in terms of the sort of market moving there. And then you obviously have the kind of the IPO route as well. In sort of an ideal world, what would the type of customer be most suited to list on the Archax exchange once you guys are obviously fully up and running?
I think it's going to be a bit of a journey. What I'm really keen on, and I think the whole team is on getting on initially, is a variety of assets. When we meet companies that are issuing equity and they want to trade on our platform, they're interesting companies when you meet them. They've got good ambitions, but is any one of them alone enough for Archax to suddenly see 100 people register for the venue to trade it? Probably not. But we've got several of those FCs already signed up to admit to our venue when we go live, and we've tried to find some interesting assets. And we're trying to complement that with some structures that we're working on with various other parties as well. So I think initially, we're looking to create a place where there are kind of several things which invoke the imagination somewhat, that are a bit of a variety. And then over time, where I'd love it to go to is to have a truly cross-border marketplace where you've got equity debt from as many jurisdictions as possible in as many asset forms. So whether that's a company, a fund, or property, and I suspect to get there we'll have to work with several partners along the way. But it doesn't really, an easily accessible multi-asset cross-jurisdictional market isn't easy for everyone to access. And if you could do that, then it would be a really exciting place to be.
What would be really interesting for me, and somebody's asked that on the Q&A as well, but if you could tell us a little bit more about what type of companies have been applying, or do you think what type of companies and industry sectors you'll be looking at applying for the platform? If you could share a little bit about what trends you've seen and what you expect to see more of going forward.
Yeah, I mean, I can pick that up to start with. I mean, we're out there continually looking for people who are issuing digital securities or security tokens. So we're looking for company and projects that are potential listings on the Archax exchange. We have a list of around 400 of those that we know of globally. It equates to about $10 billion worth of assets being tokenized. And, and that number is increasing all the time. Now, not all of those are the most credible and not all of them will come to fruition, but a large proportion of them probably will. And I should think we've spoken to around half of those, just under 200. We have ongoing conversations with around 80. And we have 35 that have lined up in our pipeline to list with us. So we have a pretty healthy pipeline of issuances, on that sort of listing side. And they vary. I mean, they vary in size from a few $1 million, maybe a trial. It's a new way of doing things, so people are, a test case really, so sort of relatively small listings. Then you get a lot in the sort of 20, 50 to $100 million. And I think the largest one we're talking to is sort of a $3 billion project. So a huge variety in terms of size, a huge variety in terms of geography. Although we're based and regulated in London, we're creating a global marketplace. So we're talking to issuances from across the globe, and a variety in terms of assets. I mean, I think the four most common one, Graham touched on them really, is fund tokenization, real estate tokenization, equity tokenization to raise money, and debt instruments as well are probably the four most common. But then everything from race horses to container ships to diamonds. People are. I mean, one of the great things about blockchain and tokenization and digital securities is the technology is allowing people to innovate, and people are looking at things that are currently, maybe they have value locked up in an asset, and tokenizing it is a way of freeing it up, or allowing people to invest in things that currently it's very difficult to invest in, they're hard to trade. So it's it's allowing people to innovate and do things differently, and so it's a pretty broad range of potential assets and listings that we're talking to about joining us on Archax.
So in terms of what this looks like, in terms of a company that's looking to list on Archax, can you maybe walk us through some of the obligations or what they'd be doing in this process of, obviously, kind of initial evaluation, the things that they would need to get into place, and then how that would look in terms of sort of a roadmap from that initial, conversation with you guys where you said, yes, this looks like a good offering. Well, what are the things they'd need to get in place to be able to list?
Well, we, I guess from a due diligence point of view, it probably isn't much different to due diligence. Most people here would be familiar with, just making sure the company exists, who the directors are, doing the AML, KYC, everything pretty straightforward in that respect, and then understanding more of their offering. So, what are the technicals behind their digital security? What blockchain is it built on? What standards does it follow? What are the rules they've got in place? And quite often there's a disparity between how they want it to operate and how we say it needs to operate to be in a regulated way. These securities cannot be created on ERC20 and then freely transferred around the world, as well as being traded on our platform. They need to stay within a regulated ecosystem. So understanding how that works and working with our issuers, and then obviously we need to register the security correctly in the CSD before they become traded on our platform. But early on, there's a bit of learning to do on our side as well in terms of the process. People are coming to us with a lot of questions at the moment, a lot of questions we've thought of, and a great deal we haven't as well. So we need to make sure that we help them structure their. We're not advising them, but we're making sure that they ask the right questions with their advisors to get their issuance submitted to our platform. But really, if someone passes our due diligence. If they pass their due diligence, if they've got an offering which suits the platform, then there's no restrictions to anyone coming to our venue.
Will you be engaging with demand side partners in advance of actually listing something? So will there be a mechanism where you're able to gather appetite for a particular listing in order to, before you prioritize actually going ahead and making that available? Is that kind of something you would look to do, or would you be more open?
I guess just being really open about one of the challenges, and slightly related to your question, is this idea of liquidity, and it's a real challenge. That I suspect when you look at most of the SME equity that we've got lined up, it's going to be a real struggle to find someone willing to make markets across all of them. And I'm sure we'll find some, and now we've got regulated, those conversations are advancing. But most people struggle with the idea of making markets when there aren't other venues to hedge their risk off, and there aren't that many similar assets. So I think if we're out looking for things which only have liquidity, we're going to struggle. So we kind of in the forefront of our minds, we're keeping. We're kind of focusing on the point of the market to kind of enable people to access SMEs, to enable SMEs to access capital markets. In terms of the interest beforehand, we're exploring whether we can help companies find ways of raising money before they're admitted to Archax. But for the most part, if they've already had a successful offering and then it comes to trade on our venue, then there will be some tokens in the hands of investors already. And if they've gone through our DD, then they would have already hit our minimum threshold requirements to be on the venue.
It's one of the things that all of these markets suffer from, right? It's kind of what the AIM listings market suffers from, and some of the US ones that we've kind of seen as well is this liquidity issue, which is one that's very hard to address. On the AIM market, we've seen it in terms of where typically these early funded companies who then go onto the AIM market, they've got 5 or 6 very large investors who have a very large share of that company before it gets listed, and then 1 or 2 get cold feet if it doesn't list straight away, and we see a bit of a dip that goes down. And I think we've seen this mirrored in some of the US exchanges with sort of OFN and also T0.
Yeah, I think just on that, Ryan, because I think an AIM does a good job with as an SME growth market, but it's not any one of us would, we can probably get to an AIM stock through our broker, but none of us really go to, or at least in my mind, go to AIM and look at all the listings that are there. And one of the things that crypto, as a general term, did really well was enabled everyone to go, okay, I can go and join an exchange, I can become a member, I can immediately see everything that's available to me, I can see what's moving, I can go and research the company, and I can invest if I want. And whilst there's a lot of unregulated activity happening there's a lot of positives to take from that. People want to be able to access investments directly, removing intermediaries where they can. They want to be free to trade. Most people are capable of some level of investment decision. So there's no reason to introduce intermediaries and fees and inefficiencies just because you're letting retail onto platforms. So I think a lot of the liquidity struggles of AIM are due to the fact that access is limited. That's at least my take. I think if you have a venue where you try and encourage access directly or through intermediaries, but you make it a focal point, you try and encourage liquidity into it, then I'm hoping that we'll be able to get more liquidity than we've seen in the past.
It's a little bit about being kind of like the Amazon of the kind of investment world, a general marketplace that has all sorts of interesting things you can browse, you can see, and you only have to look at the on the participant side, the people that we're signing up. I mean, we haven't really pushed out on that yet because we were waiting to get our regulation in place, but already we have 12 brokers signed up, who come from different parts of the world. They all bring sort of credible investor communities with them. Those 35 listings mentioned earlier, they will all have an investor base who by their very nature are bought into the tokenized world. So that's another interesting community coming there. And we are starting to sign up market makers. We've got 3 of those signed up already. So kind of creating all the right conditions to really help nurture and facilitate liquidity.
We've touched on real estate a bit there and sort of industry sectors. How do you see this changing some of the industries, be that real estate, going forward?
Well, real estate. I mean, real estate is probably one of the use cases, if that's the right term, that we see most often, and that's in a variety of forms. So there's some people that are looking to raise money to be able to develop properties. So really, it's just a property development fund. There's others that already run property funds and realize that they're illiquid by nature, so they want to create a more liquid version. And then there's fractional ownership of the underlying properties themselves. So yeah, I guess when it comes to large pieces of real estate, and I always use the Shard in London as an example, that sort of asset can only be traded by very few people globally. Most of us would never even know that transaction's going through. It's handled by big institutions who sit on hold it for a long period of time. And fractionalization is something that's talked about a lot. It's true, you can do that in digital, but you probably could have done it before. But no one really cared to do it before, maybe because of the tech or it was just inefficient. So we're also seeing a lot of people take those big assets and look to fractionalize them and have them traded on a 24/7 basis. Because even if your view is like, I want to hold that landmark asset for 7 years, that's great, but why not hold it and put it on a venue at 120 on the dollar and see if you can make your money back straight away on it. I think it just opens up a lot of possibilities in an asset class where illiquidity was probably one of the strongest factors before.
And in terms of these illiquid markets that you're talking about, is this mainly going to be in sort of things like land, property? What are the sort of the major cases you're starting to see?
I guess a lot of the space is about, it's impossible to create liquidity really. We're not kind of saying that these things are illiquid and, suddenly they're going to trade thousands of times a second. We're kind of trying to say, look, that, people that own, like your example earlier of a private equity share, when someone owns it, it's not that being liquid, suddenly everyone trades it, but it's just nice to know there's an avenue if you want liquidity, and that's what we're talking about. So facilitating liquidity for property is kind of what we're talking about here. And property, I'm thinking more probably physical assets. There's been some land, but we've seen residential equity loans in the US. Actually, the Land Registry in the UK has just done an interesting project on putting all properties, I think, or they're working on it, onto a blockchain. So everything in the space is moving in that direction. But really, we're just trying to facilitate liquidity where it's needed in any of those assets.
And one of the things that typically gets thrown against other markets within this is the number of intermediaries that kind of get involved in a certain listing, and then these piling costs before you can actually get anything listed and really start this kind of process. Can you go into a little bit more on how you guys are looking to address that? Or if you're not, I mean, are you still going to be working with the same kind of nomad type partner structure? Where do you see the cost savings by, having the process in place that you do?
Yeah, I guess the SME growth market kind of evolved out of existing markets in the UK. So to some extent, the process was already there, and you've touched on most of the key points there. And that cost, I think I read it was like 7% of an issuance, which isn't the end of the world if you're successful, but it's pretty high and acts as a bit of a barrier, especially if you have to pay a lot of those costs up front. So and again, it's not necessarily the technology, but the fact that we're able to look at these things in a different way, that we're trying to streamline that as much as possible. We're working with DLA Piper, our lawyers, on ways to make that issuance process more effective, ways to raise money more effective, and really bring that cost down. In terms of a nomad, it's not a requirement on our venue, but part of the onboarding process is an assessment. There are some. Everyone that's attending here is probably, pretty well versed in crypto, or at least finance, and has a level of understanding. Some of the companies that come to us, they're just like, look, we don't care for any of that stuff. We just want to raise money and run our telco business or whatever it is. And that sort of person needs to have an advisor in place. So, we work with the company, understanding their kind of level of understanding, and work out whether they need to work with one of our partners or not. But our preference is really to try and, really break down, those costs, think what's needed, think what's not needed. The other advantage we have is we're new at this, right? We're quite small. We don't, it's not like LSE, you've got a big business to run and a lot of costs with that. So, I'm sure there'll be some sort of fluidity to our pricing in the early years as we try and identify the right price points for listing different assets, for trading different assets. Things that trade frequently can clearly trade at a lower price than things that trade infrequently. But you're absolutely right. We want to try and make it accessible. We just don't want to put barriers up in front of people, as long as it makes sense for us to add them.
And in terms of your kind of focus in the near term, and then maybe let's say the midterm, we can only really talk midterm in today's world. Is it going to be very much on, kind of Series A type, potentially very, very high growth securities that you're looking to list, and then eventually there will be that market which will come after listing? Or are you going to go for more mature companies? So let's say maybe, as you mentioned earlier, that kind of the Series C, Series D, probably quite established, pretty advanced cap table, a few different rounds of funding, maybe a few different intermediaries in play as well. Where do you think your focus will be in the sort of the short term and the midterm?
It's unlikely you'll ever see a kind of straight to seed company appear on our venue. If it's someone's first round of funding, it's pretty unlikely, I'd say. Usually you'd need a couple of years of track record in place, and some sort of you know, and I'm not saying that we'd let anyone onto the venue, but some sort of stability in the business. You know, as I mentioned, I think when we were talking just before the chat started, what we don't want to do is, you know, create such a level of questioning of anyone that comes to our venue that we're only aiming for the very best on our venue. That's great from an Archax marketing point of view, but it really doesn't address the question of SME capital market access. So, yeah, I guess a range of companies. You'll always see at least half of the companies on our venue as SMEs, and an SME defined in ESMA is a company with less than 200 million, I think, balance sheet level. So to give you an idea, you know that will be the kind of, I'd say, 5 to 200 million range will be at least half the venue. But obviously, we'd welcome companies that are raising in excess of that want to look to this new market as well. Over time, we're hoping that people will progress into, you know, that kind of larger ML size blue chip company status and stay on our venue. And by then, I suspect that we'll partner up with larger exchanges to have some sort of a progression from our venue.
In terms of the investors that you're looking at for the platform, we've got a question here from Friday about your investors. But if you could share with us what is your investor base or your potential investor base like? What sort of size scale are we looking at? If you could share more information about what type of investors you have.
Yeah, our background is from asset management, so we're used to facing more professional investors, and that's what we've done on the venue. We're not facing retail at the moment. Our preference is to face professionals, institutions, and they would onward distribute to retail. We're considering whether or not, you know, we would allow retail more direct access in the future, but right now that's the way it is. And that's, you know, that's more suitable for us. You know, we don't have the resource to fully staff a 24/7 retail venue at the moment, but that's not to say that you couldn't get access to our venue through one of our partner brokers.
We've got a number of questions here from people in the audience, so I'm conscious about getting some of those answers because I think they're only going to get added to. A number, I'll start at the top for the sake of ease. But first question, are you addressing security tokens, assets issued natively on DLT or tokenized securities, such as traditional securities that have been tokenized and made available on chain? So the crypto sense of the STOs.
Yeah, so if I've understood correctly, there's kind of, you know, things that are created natively on digital, and then there's creating a digital representation of an existing security. So we actually have the permissions to do both on the platform. I think it's, you know, it's there are some reasons we've thought of why you could do tokenized security, tokenizing existing securities. Fractionalization is one of them, but it's more questionable how Archax adds value on some of those. You know, we could give people access to them for sure. They can be held in fractional form, and we could also maybe process corporate actions digitally. But for the most part, we're focusing on natively digital securities. And that's not to say we wouldn't add it, and it's something we've looked at for some time. There's been exchanges in the past who've tried to do it, and they haven't really taken off. So we continue to look at it, but right now we're just focusing on digital.
So one pertinent question that we haven't got into is actually from Nathan. So he asked, can you talk through the tokenization mechanism? So from both the legal and also the technical means of where the securities are being tokenized. And I imagine the follow-up to that question is also how they're being settled as well. So maybe how that kind of technically works with Archax.
Yeah, I get. Yeah, so there's quite a lot in there. I guess you know, if you and I just give this background to kind of set the scene. We're a UK regulated venue. If you have a UK company that wants to run an issuance trading on our platform with a UK participant, that's obviously the most straightforward thing we can do. But we get approached by companies everywhere. And so there are different rules in every jurisdiction around what is a security, what isn't a security, can a digital representation be a security? So, you know, so everything I say, you know, take as a broad brush approach, but broadly speaking, a company needs to work out how much they're raising, in what form they're raising it. Depending on how they're going to conduct their offering, they may need a formal offering memorandum. They need to decide on the underlying, on the target clients. Probably worth saying that all companies trying to raise money in this form should lead with their offering and not with the fact it's digital. The fact it's digital is kind of just the technology that the offering is held on. Once they've decided what they're offering, then they should choose the blockchain protocol that most suits their needs. So, whether that's Corda, whether it's Algorand, whether it's Ethereum, whatever it is, to some extent we don't care, as long as it's one of the main ones and it's kind of been battle tested to some sense. And then they go and make their offering. And at the moment, it's not something that we're doing. We're considering it in the future, but they go through their traditional means of using brokers, broker dealers, placement agents, whoever it may be, to go out there and raise money into their security. And hopefully they get us involved before that process, just to make sure that the security is set up correctly, that it can trade on our venue, and that it's registered at a CSD if it needs to be. And then in terms of settlement on the Archax venue, because we don't have a giant balance sheet, initially everything's fully funded, like most crypto exchanges are at the moment. So, anytime you trade, we check you have the right cash, the right position in your account before the transaction takes place on our venue. And it's all settled internally through our bankruptcy remote nominee company, which is the custodian for all assets and cash.
So just a follow-up question to that from Anonymous. Lots of anonymous questions, funny enough. I don't know why. Normally people name themselves. Probably your competitors, chaps. Will you guys be interfacing to the existing CSDs? It seems like you are. But are you looking to offer that service yourself in future?
Yes, we're definitely connecting into the existing CSDs. We're going to explore, whether it makes sense to, create some innovative products with existing CSDs in the future. I mean, right now, the existing CSDs are connected into the network. They've been there for a long time. It makes sense to work with them, but obviously, like everything in our space, we're looking at, how it can possibly be enhanced by using the technology we have in place.
Very good. Robin actually has asked a really pertinent question as well, are you concerned the accessibility you want to offer may result in a false sense of security for businesses that engage with you? So just summarising, what are the risks of companies who go into this, new marketplace exchange and list with a fairly new company? What are the things that they would need to assess when looking to go sort of down this route?
Yeah, that's a good question. I guess it could be viewed from a bunch of different ways, but the timing at the moment is quite a strange time. Obviously, we're going through this incredibly difficult period for everyone, and probably more than ever, SMEs need to raise money. So, and not only that. And this point isn't lost on us, is that there's a negative selection bias to a lot of companies raising money, I'd say, in crypto and digital securities. If they were to have found it easy to raise money from VCs, they probably wouldn't be considering this in the first place, unless they're just lovers of the technology. So you have to be especially careful with who we onboard onto the venue to protect the people that trade on our venue, to protect consumers, which is why the due diligence point is critical. And similarly to those companies, we don't want companies to spend a lot of money thinking that they're going to come to our venue, or that they can raise a lot of money beforehand and trade on our venue and have an easy life. People need to understand, there's a process that, having your issuance trade on Archax will be a big deal in terms of regulatory responsibilities. It's not going to be suitable for every single business across the UK. I wish it was. I wish every shop, restaurant across the UK could raise money from people locally, but probably our solution isn't the one for that. So yeah, it's a good question, and the point earlier on maintaining the transparency and making sure everyone's aware of their responsibilities are going to be key.
Thank you.
I think also there's the risk of there's a lot of firms out there who claim to be able to help you tokenize yourselves. Some of them are credible. I think we have a list of, there's about 160 we know of. Now, not all of those are the most credible. In fact, a lot of them are probably the old ICO firms who just kind of rebadged themselves. Creating a regulated security is very different to creating a utility token. So, I think selecting the right partners is very important before you even get to the Archax area. And indeed, we've sort of been highly selective and partnered with the credible tokenizer firms and others out there. So, we're kind of building an ecosystem with our partners together that can offer sort of, a credible solution throughout the whole process.
We've raised a point there, Simon, that in previous years and even recently, there's been so many projects, and I would say probably the majority that have been tokenizing something, tokenizing gold, tokenizing real estate, tokenizing, gosh, all sorts of things. And there's a lot that are genuinely working on that now, but there's been so many scams and dubious projects that have been tokenizing things. Has that affected you? Has that made anything harder for you in terms of public perception or in terms of being taken seriously or understanding? Or do people see that scams are scams and that you're different from a first perception point of view?
I think yeah. I mean, there's been a lot going on in the space. I think I think there is no doubt there's been some scams and some pretty high profile scams. But I think there's been a lot of failed businesses that also get caught in the scam bucket as well. So most of those have been quite innovative businesses trying to do cool stuff, and they just haven't raised money or raised money and not hedged their crypto or whatever it may be. Whereas there's others that just took the money and kind of ran off, and clearly those ones we really want to avoid. But unfortunately, there is a perception, especially amongst institutions, who there's just no upside for them of having the risk of being associated with crypto. So when we started 2 years ago, it was almost impossible to talk about what we were doing. And even now, when we reach out to some people for investment or for partnerships or whatever it may be, quite often the response is, look, we don't work with crypto exchanges, and it's really frustrating. We're a regulated MTF venue now, and just because we're using a certain type of technology, it's frustrating to get grouped in with others using a similar technology. So there's no doubt it's affected us, and that's one of the reasons I don't think people should lead with the technology. I think the way that we think about it is that you should lead with your offering. If your offering's not good enough, it shouldn't be good enough no matter what you're using. And then when you're offering it to people, you can give them a choice. Look, if you want, I can give you a private equity certificate that you can't trade, or you can trade on a bulletin board, or we can tokenize it and it can maybe be traded on Archax, so there's liquidity there if you want it. And I think once people realize, okay, you're just talking about a technology here, then it changes everything. People kind of had this perception of, there aren't digital securities, there aren't many STOs, but really, the securities are, they're heavily traded globally, billions, quadrillions of them, I believe. So all we're doing is changing the technology that all of them are on, and hopefully there's a bit of education to get people over that hump.
Cool, thank you.
At the end, we had very, very similar problems. I'm interested to know what's on your banned list for terms you can no longer use. We saw guys like Harbour completely take every mention of blockchain, crypto, token off their site about a year ago. We had a really interesting one where we sort of did the first part of an MTF application in Malta, and we couldn't use our own name, Token Market, because Token would flag various things with banks. I'm interested to see how your guys' approach has changed in terms of the lexicon that you're using at the moment to sort of help you get through some of those barriers.
Yeah, it's hard. It's really hard, and to some extent, it's a bit of know your audience. There's some people, if you mention crypto, it's a problem. If you say token, it's a problem. If you say stablecoin, it's a problem. So I guess stablecoin, kind of becomes e-money. STO becomes digital security. We try not to get too hung up on it, but it's definitely a sensitive area. I think crypto is a problem. Just practically, if on our venue we say we're a crypto exchange, then you're probably ruling out any conversation with any bank for a long while. So that can be a big issue. If you start saying token, I think it kind of conjures up images of something physical you can own, and it has different connotations in, if you're talking to people about casinos or in crypto. So, we just try and stick to digital securities as boring as it sounds. I'm guilty of using all of them interchangeably, rightly and wrongly at different points in time. But yeah, it's just, I think, if everyone can kind of try and understand what's behind the words rather than the words, that's helpful. But there's no doubt that some of them are falling out of favour.
And also, I think, getting FCA regulated does kind of clear the decks a bit. And people think, oh, well, if you're FCA regulated, they've been through Archax with a fine tooth comb, it must be okay. And indeed, the FCA have introduced their crypto asset, register this year, in January this year. We were happy to be the first on it last week, closely followed by Germany. But, the fact that the FCA are using that term and introducing a register for crypto asset firms, adding credibility all the time.
Well, we've got a couple of questions for you on that note about the FCA. How was it dealing with them? And how long did it take for you to, from the time you submitted your application, to get it authorised?
Yeah, yes. So it's, I mean, look, on the whole, they've been amazing. It's, and I mean that from a consumer protection point of view. If you were a consumer seeing the questions that we took and the way that they're treating it, I think you'd be pretty happy that we've been asked the right questions. We first went in to speak to them probably 2 years ago now, about what we were planning on doing, and what we intended to apply for. And really, that was how we spent the end of 2018 before we finally submitted our application at the end of Q1 last year. So it's taken us 16, 17 months. But I guess ideally it would have been a 12-month process. And there's some things I think could have been done better. I'm sure there's some things they think could have been done better as well. But we have to bear in mind, in the middle of all of this, there was a new permission brought in place, the crypto asset permission, which meant we had to do another application in the middle of it. We've just gone through a global pandemic, and the FCA also released their consultation papers on most of the crypto space. So, we were in an evolving space that was moving, which was hard to keep up with. And the pathway for a digital securities MTF is not like a kind of a straightforward pathway that's available online to follow. So I think the right questions were asked. I think there were times when there was frustration on our side that things could have been addressed a bit easier. But ultimately we're here now, and I probably feel more comfortable with our offering having been through it than if we hadn't been through it.
One of the questions that we've got in, which I think lends itself to a subject we went on a little bit earlier, was around differing jurisdictions. So this is the kind of the great dream of tokenized securities, is that you're able to tap into various different liquidity pools in various different jurisdictions, potentially dual listed across certain others as well. And we've got JD who asked about how you see sort of the UK regulation comparing to potentially other venues which have started to launch tokenized securities exchanges.
Yeah, so most the technology doesn't solve most of these problems, and there's a lot of regulation out there, a lot of law out there. It's really difficult to navigate, and a lot of the times the regs and the rules have followed the way that the incumbents do business. So quite a lot of time you have to dig into why it's there and how it can be changed. For the most part, I find most of the regs kind of, the way I like to think of them, is like pseudocode. The rules are all there. You just need to know where they are, and then you can build your business around them. And there aren't too many barriers to being able to operate globally. But it's definitely true that it's not like a crypto venue where we're going to spin up and suddenly everyone from all around the world is going to trade in volume every security around the world. That's just not going to happen. We need to work. We need to definitely understand the rules that are in every place, and probably we need to establish good, credible partners in all of the jurisdictions. We're speaking to a lot of people in the US. It's clearly a huge jurisdiction for this. It's also one that has some of the most complex rule sets. So you need to be very careful about going into the US. There's all of there's the interoperability between CSDs and settlement and clearinghouses globally that needs to be taken into consideration. There's the fact the UK is pulling out of Europe that needs to be taken into account, and then there's obviously Asia, South America as well, which are making great strides as well. So we're looking at all of them. We're speaking to potential partners in all of the jurisdiction, and I think we'll get there. And I think for the most part, when you can find regulated entities of a similar mindset in those areas, you'll get there faster, but we'll get there. It's just a matter of working out how.
So what percentage of your time is spent with lawyers right now, Graham, to work out all of these issues? It must be a sizable chunk.
Yeah, we're quite fortunate actually that I used to be chief compliance officer of our last hedge fund, and Alex, our chief compliance officer, joined us from the FCA. So we're pretty well versed in the UK and European legislation and regulation. And obviously, once you expand beyond that, we start to get a bit more thin on the ground. I think what we've achieved has been fantastic, but we're a startup. We'll be a lot less time is spent with lawyers than is spent on fundraising at the moment. And now we're moving into this kind of growth launch stage. Then we'll be increasing our spend on that legal side. What we want to make sure happen is that everything that happens on our venue is conducted the right way, so that it doesn't take away from the kind of the real regulated narrative that we've been on so far.
Well, we've had a couple of questions about your fundraising. Are you open to fundraising? Will you be doing raise in the near future? How can invest in you? So
yeah, there's something hopefully pretty exciting getting announced pretty soon. We actually raised our seed round and our regulated capital round already. There are some investment opportunities available right now, and an interesting one coming in the future as well.
Oh, great, thank you. Question from Rob. He's asking about your FCA, about the FCA. Do you think the FCA responses will be positively or negatively impacted by the pandemic?
Well, I think the FCA, like everyone, it's a big organisation, and just at the detail level, they had to all go and work from home. So I don't think that helped us necessarily. That they were trying to approve us being from at home. I don't think the UK generally has always tried to pride itself on financial services and financial innovation. So I think a combination of trying to be regulated in London and Brexit has meant that we've always felt like we should be embraced. And the fact that we're trying to launch an SME growth market, we've been trying to put the word out there and trying to speak to whoever possible. Look, we really feel like we can make a difference at the moment in the space. I think it would be wrong to say that that's necessarily been embraced at the FCA. I think people are aware of it, but and I mean this in the most respectful way possibly. They've just been doing their job. There are certain requirements that an MTF custodian broker has to follow, and they've made sure we followed them without trying to confuse the messaging with how important we might be, no matter how hard we've tried to bang that drum.
Another question from Rob. Are you concerned that the accessibility that you want to offer may result in a false sense of security for the businesses that engage with you? And if so, what do you do to counter this to ensure your customers fully understand the risks and that some SMEs are very ill-equipped to understand this environment?
Yeah, I think we touched on some of those points earlier, but when the SMEs come onto our venue, we're going to make sure that they are aware of everything that they need to do. I guess, one thing we didn't touch on is on the customer side so much. Certainly, we're going to have all of the transparency information that we talked about earlier. But the other thing is, as well, is, there's in the crypto world, again, you've got everything's a 24/7 central limit order book. And then in traditional world, you've got, let's say 9 to 5 markets. But there's a bunch of other types of markets that you can have. You can have ongoing auctions, you can have, semi-annual auctions. So when we find a security, we're not just going to move everything to a 24/7 central limit order book. That'll be probably pretty inefficient from everything point of view, and especially price discovery. So, there's going to be a bit of a period on working out the most appropriate market for every issuance that comes onto our platform to, try and maximize liquidity and price discovery wherever we can.
Here's a question a bit off the wall for you. So we've seen this explosion in DeFi at the moment, which is this, I think now over $6 billion market, which has kind of gone from 600 million back in March, where various protocols are going to be let loose very soon, where admin keys are going to be dropped and these things go off, and you're going to be able to, lend without various regulations. Do you see, maybe not right now, but a future where someone like Archax might draw from some of the liquidity in some of those pools from those very loose markets?
I guess just to set our stall out early, we all love the space. We are, we love all of the innovation that's taking place. We've taken investment from some people that are doing some pretty innovative stuff in the area, and we're not against it. But that doesn't mean to say that we don't look at what's going on there and think some of it is breaking a lot of rules. In terms of people lending money without consumer lending agreements, no KYC, no custodian agreements. I would argue a lot of the governance token as securities, and I think, stuff will happen there over time. And, even though most of them claim to be decentralized, you only have to spend half an hour on Twitter and you can probably find 2 or 3 people that are responsible for most of it. So, I guess I guess, it's cool, it's fun, I love it. But, there's a lot of activity there that probably shouldn't be taking place. Now, what's interesting is if you look in that area and go, okay, now imagine we wanted to do this in a legitimate way, create exactly the same sort of automated transactions that take place using smart contracts. How could we do it and satisfy the regulation? And that's exactly what we're looking at. We're making an announcement in the next couple of days on someone that we're working with on that. But it is possible to do a lot of the lending, borrowing, staking, non-custodial stuff that you're seeing on a regulated platform in a legitimate way. And that's a lot of what we'll be spending the next 6 months in doing is, how do we take what is ostensibly a kind of, a DeFi off-radar activity and trying to bring it to the institutional masses.
Okay. We've got a comment from Eric Clay, who's saying, first of all, congratulations, guys, but question about the buy side. What does a family office or institutional investor have to do to be able to buy or own tokens, given that most don't even know how to safely hold or custody a token? What do you think needs to happen to educate the buy side to unlock the liquidity we all hope for?
Yeah, so we've spent a lot of time working on the issuances and our platform, obviously, and we've resisted yet going out and speaking too much to the buy side. We were on the buy side, and if people had come to you pre-regs, pre-product, you probably wouldn't have spent much time with them. So we were just holding off for more or less this kind of moment to go out to them. And I guess what we're going to be leading with there is the things that trade on our venue aren't available elsewhere. If you're a broker and you've got clients who are searching for yield or sort of innovative opportunities, you're going to find them on Archax. In terms of if any one of us has done the walk into crypto, you kind of, when you first do, like, what's a public key, what's a private key, what's a MetaMask wallet, what's a hardware wallet, whatever it is, there's a bit of a journey you go through. Digital securities are different. They're not bearer instruments in the same way. For the most part, if you're a broker that registers for the Archax platform, you'll come onto our platform, you'll trade something, and we will custody it for you. You almost wouldn't care that it's a digital security, at least in the near term. Over time, all that will happen is that technology enables us to unlock and make the markets a lot more efficient. From a user's point of view, it's just a more efficient security.
Cool, thank you.
We've got one last question from my namesake, Ryan. What's your long-term strategy for customer acquisition and how you go about marketing the platform to institutional investors?
So we've got, Simon will probably give me the right number, but we've got 12 brokers on board at the moment. One of those has double-digit million clients. They don't have an exchange permission in the UK. I'd love to tell you the name of it. They don't have an exchange permission in the UK, but they do have full retail brokerage permissions. Everyone would be familiar with the name. It's in the crypto space, and they could quite easily distribute everything we're doing to their clients. We've also built it in such a way to make it as accessible as possible. So our CTO spent most of his career being shouted at by all the traders about how they want the systems to look, and he's kind of took those lessons on the chin and brought them all to Archax. So hopefully everyone can connect their existing system straight into us with as little as pain point as possible. So if you're a broker out there that's looking to just add some interesting securities to your offering, you can just connect into us and turn them on, and there's relatively little headache.
I think also the Archax team, we all come from the traditional financial markets world, so we're very used to selling and marketing to that space. We've done it before, and we need to do it again. I mean, we do accept that there is an education that needs to take place. A lot of the traditional world is blissfully unaware of the benefits of tokenization and digital securities. But one of the things I find is whenever you talk to anyone who just thinks crypto is for drug dealers and money laundering, actually when you do explain the difference and what tokenization is and what digital securities bring, they get it. So it's not, they're just unaware, but when you explain it to them, they understand it and they believe in it and like it. So, part of our marketing and selling will involve educating the traditional world about what we're doing. So, it's an important part.
Rob just posted that comment in the chat that basically everything that you're doing is amazing, but so much education is needed and simplifying to get more people understanding and involved.
Yeah, that's right. And there's a lot of people doing a lot of good education in the space. I think a lot of the more well-established, like A16Z and others, have got some really good education portals on their website. And we've had conversations in the past about how we do that, with some explainer videos. Right now, where we're relatively young and it's a small audience. Everyone can reach out to us directly, and we can walk them through everything we're doing. But as time grows, we need to educate the masses. You're absolutely right.
No, well, both of you, thank you so much for joining us on this Crypto Curry Live. Really, really grateful, because we know how busy you are at the moment and how little sleep you guys have had. So really grateful for people joining us. Ryan, I don't know if you've got any other last.
This is the one that Erica just is dying to ask from the start, and we have to ask at the end. And of course, the most important question, seeing as we're talking for the Crypto Curry Club, is what is your favourite curry? And please, chicken tikka masala, because we've had that about 12 times in the last 4 weeks.
I'm a bit of a Balti fan, I must admit. So, different styles of Balti, but I like the Balti style of cooking. So.
Good job.
Okay, Graham?
Well, I'm a bit of a Boona fan, but I must admit I usually go for a biryani, because you quite often get a little spare curry on the side for free.
No, thank you guys. Thank you so much for being so gracious with your time and question. We've had so many positive comments on the chat and in the Q&A, and just by private messages about how much people have learned from you guys, how informative this has been, and how amazing what you guys are doing.
Yeah, if you want to get in touch with us, if there's any questions we didn't answer, reach out to any one of us on LinkedIn, or drop an email to info@archax.com, and we'll get straight back to you. Alternatively, if you go down the Ned, you'll usually find Simon there, so you can just go and ask him directly.
Perfect. No, thank you so much, everyone who's joined and asked all of the questions, and thanks to Simon and Graham, and congratulations again, and best of luck to your continued.
Thanks so much for having us.
Thanks. Yeah. Cheers.
Thanks, Graham.
Bye.
Thank you.